Welcome to Resilience and Resolve with Lance Drury.
Welcome back to Resilience and Resolve with attorney Lance Drury. For more than 30 years, Lance has helped individuals and small business owners regain control when IRS problems feel overwhelming. I'm Evan Mack, and today we're tackling a question that comes up all the time for people who are behind on filing. How far back the IRS can actually require you to file tax returns, and why guessing wrong can make difficult situations even worse. Lance Drury, sir, good to see you.
How you doing, Evan? It's always great to see you.
Good to see you too. Lance, when someone hasn't filed for, several years, how does the IRS usually decide how far back they need to go?
Well, the IRS regulations state that the taxpayer has to have the last 6 years' tax returns prepared and filed before the IRS will even talk to you about a settlement on your back taxes. And it's also a crime not to file your tax returns, so you have to do it. Now, here's a problem, Evan, and it comes up all the time. And this is why I tell people, you need to have an attorney that does this every single day. Accountants are great with the numbers, but all my attorneys have seen the accountants give atrocious advice to taxpayers because they just dabble in IRS stuff. They're great at what they do. They're great with the numbers. They're great at preparing returns. And here's the biggest mistake they make, particularly with self-employed people, and I've seen this over and over. Taxpayer has 10 years of unfiled returns. The accountant says we need to file every single one of those returns and file with the IRS. Well, right now, come April, the last 6 years will be 2020 to 2025. So let's say his taxpayer files 16, 17, 18, and 19.
Mm-hmm.
If before they file, you haven't filed the return and the IRS hasn't filed for you, which is called a substitute for return, SFRs, your tax liability is zero. So if you're self-employed and you haven't made estimated tax returns, when you file that tax returns, you're going to owe a bunch of money to Uncle Sam. So I've seen accountants put $30, $40, $50, $60,000 or more on the books for their clients that didn't have to be there because there wasn't a filing requirement.
Wow.
So if you don't take anything else out of this particular podcast, remember, whether it's personal, whether it's business, you only have to file the last 6 years. Now, if the IRS has filed for you and you're self-employed and it's from 2018, because they don't keep track of your business expenses, you're probably going to owe more than $100,000. So you do want to file the return in that case because you can generally get the liability down to $10,000 or less because, as I've said, the IRS does not keep track of your business expenses. But that's the only situation when you want to go beyond the 6-year criteria that the IRS has set.
Many people hear different numbers from different sources. Why isn't there a simple one-size-fits-all answer to how many years must be filed, Lance?
Well, there is. It's 6 years. I mean, but it doesn't fit everybody because if the IRS in those prior years has filed a return for you, merely by filing, you can probably lower your liability because in the case of a personal return, they don't give you all the credits and deductions you're entitled to. And what they do is if you're married and you're used to filing jointly, they'll just file individually. They won't file for both of you. And so the liability is going to be higher. And obviously for a business, if the IRS has filed for you, you're going to want to file because none of your business expenses are there. So that's what you need to do. And that's the problem when you have unfiled returns, and you got to get the returns done. Because I said earlier, it's not a crime not to pay your taxes in most cases, but it is a crime not to file your tax returns, at least the last 6 years at the federal level.
Yeah, but Lance, what tends to happen though when someone files fewer years than the IRS expects, fewer than those 6 years that you were talking about?
Well, they're not going to talk to you about a resolution.
Mm,
They are not going, let's say you got $30,000 liability and you call up the IRS and you say you want to set up an installment agreement on that. They're going to say, no, you've got to get these tax returns filed first. And here's the years you need to get done. And until then, we're not going to talk about an agreement. And then you want to do that because here's what happens if you set up an agreement and then you decide to file those other returns later. Guess what? Guess what? Then you're going to default on that agreement because now you have new liability. So you got to make sure that you have the last 6 years' tax returns prepared and filed.
mm. So, so what? Wait. So, how does filing those correct number of years affect whether the IRS considers someone compliant?
Well, if you file the last 6 years, the IRS will consider you compliant for purposes of getting into a negotiation on the past due taxes. But here's what you got to remember: people come to me, I set them up on an agreement, I tell them all the time, you got to be 100% compliant moving forward. And if you're not, you've wasted all your money in hiring me because the IRS is going to default you on the agreement because it's a condition of any agreement with the IRS that you're 100% compliant moving forward. So get your agreement and make sure you never have tax liability again and make sure you never file late in the future.
Hmm. You work with people like, yeah, you work with people who assume those older years don't matter anymore. Do you have a situation where that assumption caused problems for them?
Well, if you go beyond the last 6 years and they think it's not a problem, well, it's not unless the IRS has filed for you. Then it could be a huge problem, particularly if you're self employed. You may be looking at a six-figure tax liability simply because you didn't file. And guess what? The longer you wait, the harder it's going to be to find the documentation that you need to prepare the return. So some people don't keep that documentation 10 years later, and so if you're self employed, you don't have documentation for all those business expenses. Guess what? You're probably going to have to live with that six-figure liability. Obviously, you can negotiate with the IRS based upon your ability to pay it back, whereby you won't pay most of it back. 85 to 90% of our clients never pay back the full amount, but you're still going to have to go through all that and prove to them that you don't have their ability. So it's never a good idea just to put your head in the sand and ignore the fact that you got to file your tax returns.
Lance, how do those unfiled returns affect the IRS's ability to enforce collection even before payment is even discussed?
Well, they'll send you notices that you've got unfiled returns.
Hmm.
And they can still come after you if you got unfiled returns and you have liability on the books. That does not prevent them from levying you. They can still come after your bank account. They can still seize assets. They can still come after your suppliers' accounts receivable that they owe you. They can still come after your take home pay. They can still come after your 1099s. So just the fact that you haven't filed all these returns, it affects your ability to get an agreement, but it does not affect the IRS's ability to come after you and to seize income or assets in satisfaction of whatever debt you already have on the books.
Mm. What role does income reporting play when the IRS evaluates how far back that filing should go?
Well, it really doesn't affect it. The rule is ironclad. It's 6 years.
Mhm.
So there's not really any other variables that can affect how many years you need to file. Now, sometimes you'll get a revenue officer and they'll try to make you file those older returns, but that's not done in very many cases. And I believe they've got to get managerial approval for that. So, for the most part, you don't have to worry. It's the last 6 years, and there's really no other variables that come into play.
And speaking with that though, how does filing those right years open the door to resolution options that otherwise wouldn't be available, Lance?
Well, now you're free to get a resolution. You're free to set up a plan because now you're compliant, and the IRS is going to require that before they talk about a resolution with you. And don't just call up the IRS. I go through this all the time.
Mhm.
People think they can do it on their own, Evan, and they call them up, they get an agreement, then they call me, they sit down next to me in this conference room that I'm talking to you from right now, and the first words out of their mouth are, I can't afford the monthly agreement. And I go, then why did you agree to do this?
Mhm.
And they go, because the IRS told me I had to. That is not right. They take advantage of lay people. When you call them up, they're going to set an agreement for every last dime you owe them, including penalties and interest. What they don't tell you is this is all based on your ability to pay the tax back. 85 to 90% of my clients never pay back the full amount, but it's a lot of work for the taxpayer, for us, because we have to go through financial statements, bank statements, credit card statements, because we have to prove to the satisfaction of the IRS that you don't have the ability to pay all this back.
And Lance, for someone listening who's unsure how far back they need to file, what should they understand before taking that next step?
Well, they need to call us, number one, and we'll let them know, because not only do they need to file the last 6 years, they'll tell you they've filed. And guess what? We go in and we do a compliance check. They give us a power of attorney. We don't call the IRS because that just puts you on their radar. They'll make unreasonable demands, give us unreasonable deadlines. We have special software that costs me a pretty penny, but we can go in, go all the way back to 1990. But guess what happens?
Hmm.
People say, oh, I sent that in. I don't have any problems. And I believe them, because then when I ask for the return, I get it right away. But we'll go in and the IRS will show that the return has never been filed. Well, guess what? One of two things happen. They're a bureaucracy, they lose stuff. Anything that's important, we send in by certified mail,
Hmm.
because even though it's expensive, we have to do it because we have to track it, because they lose stuff all the time. And guess what, Evan?
Hmm.
The only agency as screwed up as the IRS is the Postal Service. So they can lose it. So that's why we track it and spend all that money, because we have to make sure that the IRS has it. Because if we don't have the proof that they accepted it, guess who's going to win that argument?
Lance, it's a pleasure as always, sir.
Great to be here, Evan. I look forward to seeing you again.
Absolutely. And thank you all for listening to Resilience and Resolve with Attorney Lance Drury. When it comes to unfiled tax returns, filing too few years can be just as damaging as not filing at all. If you're behind on filing and want guidance on how to get compliant the right way before things escalate, visit lancedrurylaw.com. Be sure to like, subscribe, leave a review if you found this episode helpful. Thank you so much, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.